So friends, it's been another 7 days, and if you've been here for a while, this video intro may remind you of some of my earliest videos where I would just have a Word doc and it'd be a little bit more narrative in style, a little bit more free-flowing, not so much a story time segment. And with this, it does bring change, which I do want to share with you on a quick channel update. As I'm sure you can also tell by the title of this week's video, it is also a bit different. And you're right, you did see the title correctly. This is a monthly dividend portfolio review for the month of October, and I'll explain why here in a second. But just know, I am a dividend investor. I do invest for dividends. That will not change. It hasn't changed, and I don't plan it to ever change. This is my investment strategy of choice. I fully believe in this strategy, and up to this point, after doing it for over 2 years now, I have seen results. It is working for me and the lifestyle that I live right now and the one that I hope to live in the future as well. I just want to make that very clear because I will be going into some channel updates which do, I guess, include some changes. But I just want to be transparent with you during a transition that I see for this channel moving forward. But as you did see by the video title, this is a monthly dividend review. So because of that, these will be typically like milestone videos, as I'll be sharing with you various things of my personal portfolio, such as how much I fund it currently and how often. I'll also be going into my sector allocations and percentages, and with that, showing you some of the best and worst performers per each sector in this current down market, which I think is pretty interesting. So I'll show you that as well. I'll also be sharing with you my current number of holdings that I have in this portfolio, as well as my current dividend portfolio's yield and also expense ratio. And then towards the end as well, I'll also be sharing with you some short and long-term plans as time continues to move forward. And then of course, last but never least, I'll also share with you how much my dividend portfolio currently pays me in dividends. But first, as I mentioned, I do have a quick channel update because I do ultimately want to remain transparent with you during any, I guess, major transition of this channel. This channel is something I've been doing over the last 2 years, and it is something that I do strictly as a hobby. I don't make anything from it right now, and I do show up every single week for it. But every single week that I do show up for it is time that I enjoy, and I always look forward to it. It's been fun. It's been a fun process to go from 0 subs to 1,000, and at the same time, it's also been fun to go from a dividend portfolio of $0 all the way up to over $60,000. I do just want to make it clear, the dividend aspect of this portfolio, underlyingly, will not change. I am a dividend investor still, and will continue to be. And I guess I could just start by saying, when I first created this YouTube channel, I selected the name Continues to Tick as a reference to time, because I've always been very future oriented. I've always been fascinated by time. I always think it's fascinating to see time and how it unfolds, how, you get older and you look at a certain picture and you see how much you've grown, or you've seen how much your grandparents have grown. I've always been fascinated by time. So when I first started this channel, that has always been the umbrella, that fascination with time. And an easy pivot point, which is where I started, was talking about dividend investing, because I've always been financially motivated. I've always been wanting to have a successful life financially. And a lot of that at the beginning was by choosing that investment strategy. Because as you know, as dividend investors, dividend investing, it takes time. You can't get rich overnight. It's not a get rich quick scheme. It takes time, it takes discipline, it takes consistency. So it was a really good pivot point for that umbrella and that connection to time. So it was very easy at the beginning for me to just go that route. But now as time continues to have ticked, as it has continued to have gone and evolved, and I continue to grow as a person and still have this fascination with time, I realize that I do want to be successful in life financially, but I also want to be successful in life in so many other areas. I want to ultimately be the best person that I can be, and finances is a pillar. It's just one segment, one branch connected to that. The way I look at it is for me to be successful as a person. Yes, I do need to be successful financially. So what am I doing for that? Well, I'm investing in dividends. I have a pension as well working in the background. I have a great career. That's one pillar. But what are the others? And that's when I started to explore more into what are these other pillars that I'm also trying to grow. Because one thing I fear is being financially successful, but being horrible in every other facet of my life. For example, growing in money and being wealthy and rich one day, but not growing in relationships, not growing physically, like by my body, not being proud of the way I look. Also not growing my EQ, for example, having low emotional intelligence. I guess what I'm trying to say is, in order to be successful in this life, I'm realizing over time, is that you have to be great in so many areas, not just finances. You have to dig deep into your life and recognize, what is it that I do this for? I want to one day in the future, and even now I think I can say yes, but one day in the future, my ultimate goal in this life is that when someone asks me, hey Jesse, how are you feeling? How do you feel? I can honestly and genuinely say, I feel good. You know what? I feel good. My money's good. My career's good. My relationships are good. My body's good. My mind is good. I'm as strong as I could ever have been right now, based on the work that I did. That's where I want to be one day, is to say when someone asks me how you're doing, genuinely say that I feel good. But in order to do that, you need to grow in more areas than just money. You need to grow in every single aspect of your life. And that's what I'm trying to do with this channel. So that is one of the changes. Over time, you're going to be seeing more personal development videos. And in these videos, I'm not going to be including dividend investing segments. For example, I'm going to be separating the story time videos separate from the dividend investing videos. But I'll also be branching off into other videos as well, other video topics. Maybe I'll explain things that have worked in my relationship. I've been in a relationship for over 6 years. We're unmarried and we're happy, but it is work. But I think there's value there to share in terms of how I've been able to do that. I've also been working out every single day. Every single day I've been working out for the last couple months. I would say at least 6 months now. And I've been seeing a transformation in my body, but also the way I feel, and funny, also the way people look at me and treat me. And I also think there's value there. My girlfriend has pushed me a lot in terms of growing my emotional intelligence. And I feel like there's a lot of value there because I was very closed-minded, very into male masculinity, and I wasn't able to open up. But I have been now. And it's made my relationship and me as a person that much better. And I really feel like there's value there. And as you know, I'm a dividend investor. You know I can go from $0 to $60,000, right? You've seen it. At the same time, career-wise, I'm a nurse, I'm an RN, I'm getting my master's degree. There's a lot of value there. I just feel like ultimately, under this umbrella of time, and the YouTube name continues to tick, I have this really bigger, way bigger vision for this channel. So I hope you can see that over time, this is a change right now of changing into month-to-month dividend portfolio reviews. But it's also more than that. I'm going to be going into a lot of personal development. And at the same time, I'll also be still sharing those storytime videos because I still enjoy those. I actually enjoy making those the most than any video or any topic because I'm a deep thinker. And then just to summarize this is the change for this channel. So I hope moving forward, if the journey still aligns, I'll be glad and happy to still see you here, as I'll be here every single week. That won't change. As you can see here, this is the Jesse's Cash Flow Portfolio. If you've been here for a while, you've seen this grow over time. We're currently now down in the red, and we've been in the red for some time now due to these really strange markets. But I guess they're really not that strange, as we know what's going on. Interest rates are going up, inflation's going up, everything is going downhill, including our net worth. It's unfortunate, but that is the times that we're currently in. Everything boomed after COVID, but now we're going back down to earth. And this is on the all-time charts. We have a total negative loss of 5.84%, which equates to a total loss of the portfolio of $1,768.55. And if you look a little closer here, for market gain, which now is market loss, it was a loss of $3,962.80. And earned dividends amount is there to combat this of $2,194.25. And if it wasn't for the dividends, we would be in the hole of about almost $4,000. So I guess thanks, dividends. On our last year's performance, the last 365 days, we had a loss of 13.52%. which was a total loss of the portfolio of $6,978.93. That is a lot. And if it wasn't for the dividends, we would have a total loss over the last 365 days of $8,461.45. Ouch. But we don't care about the last year, right? We care about all time. All time is what matters. And that's a little better. And just moving down below here, one thing I haven't said in a while, but there is a link always in my description box. If you're curious to see what it is that I'm holding, you want to go at your own leisurely time, and you want to see, hey, what's in Jesse's cash flow portfolio? Maybe I don't want to do exactly what he's doing, but I just want to get some ideas. There's a link down in my description box down below, so go ahead and click on it if you're curious. But now moving into our sector allocations and percentages. We'll go one section at a time. I'm going to click on it, I'll show you what's in it, and then we'll actually kind of review it. See which ones are the best and the worst performers in each of these slices. I always have fun doing this part. Let's start with consumer staples. So consumer staples is 12% of my portfolio. That's what I set it at. And in here, these are the holdings that I have. The best performer currently in this portfolio is ADM with a 94.21% return. And my worst one is Walgreens at 39.59%. And I can dig into the aspects of the reasons why, but that'd be a really long video. So I'll just keep it very superficial. That one's the best, that one's the worst. You can always ask me in the comment section if you have any questions. So we start with consumer staples, but we actually skipped real estate. So let's click on real estate. Real estate is 13% of my dividend portfolio. And in here, these are the holdings that I have. The best performer, I guess with the least loss, I guess we can say, is Avalon Bay Communities. And the worst performer is actually Digital Realty Trust, taking a hit of 58.75%. And then next up we have the ETF holding that I have. It's 10% of my dividend portfolio, and it has an overall return of 5.70%. So this one is actually still in the green, and it's SPYD if you're curious. And then next up I have this index fund here, which is also 10% of my dividend portfolio. But this one hasn't been so lucky. It's actually taken a hit, and it's VIG. It has a total loss of 12.20%. So it's interesting, right? VIG is in the red, SPYD is in the green. SPYD is actually a high dividend paying ETF. A lot of people are probably wanting to eat that up right now. And these markets, they have a lot of unknowns. Cash is king, right? Is what they say. But next up, here's our tech sector. It also makes 10% of my dividend portfolio, and it's overall in the red. The best performer in here, I guess to no surprise, is Apple at 5.68%, and the worst performer is Nvidia. Nvidia was actually performing super hot for quite some time. It was actually one of my biggest returns, and now it's down 56%. Not so much my biggest return. And let me just go over this because I think I did forget to mention. Real estate as a sector is in the red for my portfolio, minus 33.89%. Consumer staples as a sector is green in my portfolio, 14.60%. The ETF SPYD, as we know, is up in the green, and VIG is in the red. But tech as a sector is also in the red, 23.52%. Next up is utilities. As a sector, it's down 2.26% in my dividend portfolio, and it is 10% of my portfolio itself. And in here, these are my holdings. Quite a few. I like to be diversified, but it looks like the best performer is Sempra Energy at 24%, while the worst performer is UGI at 26.30%. And then next up we have healthcare. It's 7% of my dividend portfolio, and it's down 9.87%. And if we look a little closer here, we can see these are my holdings. Medtronic is actually the worst performer at 42.87%, whereas Pfizer is actually in the green and it's doing okay. It's doing fairly well at 16.92%. Johnson & Johnson in the middle at 9%. And then M1 keeps confusing me, but here we are in financials because I don't think we've touched on this one yet. It's 9% allocated in the portfolio, and it has a total return of 16.72%, so it's still in the green. And if we look a little closer here, we can see JP Morgan Chase is my worst performer at 25.39% loss, and Chubb is in the green, doing well, 34% return. I'll take it, Chubb. And then industrials here is 8%. We haven't gone over this one. and it actually has an 8% return for the portfolio as a sector. And looking a little closer here, we can see that General Dynamics is actually the best performer at 53% return, whereas 3M has been taking a hit for a while. They have a lot of things going on, including some lawsuits, and they're down 51%. But 3M is 3M. It's been here forever. And then next up, I have Communications. I almost don't even want to show you this one. It is the worst in my portfolio at negative 46%, but luckily it's only a 5% allocation. And to no surprise, the worst performer is Comcast. I've gotten some slack from this one by holding this one. I don't know. It is a juggernaut. It's a revenue king. It gets a lot of revenue. And I know it is kind of not modern, right? But they do now have a streaming service and they're doing pretty good with Peacock. A lot of people use it. I don't want to dive too deep into it, but I just had to rationalize it a little bit for the big loss that I'm taking on it at this time. Whereas on contrast, Omnicom Group, simple. They're in the green still. Simple company. No one ever talks about them. What else? Energy. This is the sector I'm most proud of in a way. Maybe not so much for the environment, but I am most proud of in my portfolio. It is 3% allocated in my portfolio, and it has a return of 103%. And you probably know why, if you're a dividend investor or just an investor in general. It is the gas companies, the oil companies. XOM, 213% return. Chevron, might as well share it, 136% return. And the NextEra Energy, the company of the future, I guess you can say, which is kind of ironic, down 5%. And then next up we have materials here. We're getting lower and lower. This is only 2% of my dividend portfolio, and it's taking a loss of 14%. And then in here, I only have Sherwin-Williams and Sunoco products. One has to be clearly better than the other, right? There's only two. The red is Sherwin-Williams by quite a bit, and then Sunoco is in the green, the best performer in that sector. And I believe last but not least, we have consumer discretionary. 1% of my dividend portfolio, but it's only one company, and its 16.46% return is solid. And of course, I'm loving it. It's McDonald's. Sorry, I had to do it. So now to go further into the data. My cost basis of this dividend portfolio, might as well, because I'm here, I'll share it with you. It's $59,153.69. That is the amount of money I funneled into this portfolio. Unfortunately, I do have a loss of $3,000, but fortunately, as you've seen all time, because I am a dividend investor, some of this has been addressed with the dividend gain. And as you can see here, there's a little peek at the number of holdings that I have, but I'll also show you in this other area over here. This is more of my data section here of the Jesse's cash flow portfolio. You can see, once again, that I am holding 51 stocks in this portfolio. I've been holding 51 since pretty much the beginning. I always make the analogy of being a small kid, needing to grow into a bigger pair of shoes. I always knew one day, or I even know today, I'm going to have a multi-million-dollar portfolio, dividend portfolio, by the time I go to retire. And because of that, I'm not too worried of the number of holdings that I have. I know at the beginning 51 was quite a bit, but over time it's going to be less and less significant is the plan, as my portfolio continues to get bigger. I haven't seen too much of a hit in terms of gains. A lot of people say the more holdings you have, the more it stunts your potential growth in your portfolio, but I haven't seen that so much. And then moving on over here, you can see the dividend yield, which is currently 3.323%, or about 3.3%. And this is higher than typically it has been. I think typically it's been around 2.8 and 3. Now it's at 3.3. And then here's my expense ratio of 0.02%. It's really, really small. My rationale is I really don't like giving away more money than I need to. And I also enjoy kind of creating my own portfolio. I selected all of these holdings. In the very beginning when I first started, I did a lot of upfront research, selected 51 companies that I really believed in, that I really felt diversified in, and ready for the long haul. And so far, over the 2+ years, it's been doing good. Until most recently, but most recently I'd say we've all been taking hits. And before I dive into how much I'm actually making in this portfolio in dividends, I just want to share some of the plans that I have with this portfolio. I'm currently only investing $100 every single week. Previously, I was actually investing $500 every week, but because of the downturn markets and the timing, I'm really starting to double down and save up for a house. So I'm investing $100 here and I'm saving $400 into a savings account. trying to build up a cash reserve for a house. And ultimately, that is my game plan for right now, and that is my game plan moving forward, at least over the next 2 to 3 years. For the super long term, I see myself being a dividend investor until the end. I hope to retire by the age of 50. I'm also a state employee. I work as an RN at one of the state prisons here in California, and I'm building up a pension in the background. So because of that, I hope to have an early retirement, and then this will only, hopefully, enhance that retirement. At the same time, it helps because I don't have to fully trust in this pension. Anything can happen. I'd rather have my own cards as well, in addition to the ones that are handed to me, if that makes sense. So on the short term, I'm investing $100 every single week in order to save up a house. On the back end, saving up cash. That is my plan. And then just to show you here, this is the Div Tracker app, just to show you how much it is that I'm actually making in dividends. As you can see, there's a slight discrepancy. On the Div Tracker app, it says I have $55,300 or $325. And then on the M1 Finance, it was closer to $55,390. But for the most part, they're fairly close. And as you can see here on the composition, VIG and SPYD are my two biggest holdings. They are index funds or ETFs on their own. So because of that, they're already diversified. Everything under there is under 5%. And when it comes to annual dividend income for the portfolio size of $55,000, I'm currently making $1,822.80. On the monthly basis, this is $151.90, which is pretty good. That's a couple tanks of gas. And on the daily basis, if you break it down further, it's about $5. And on here, there's also a slight discrepancy. There always tends to be between the Div Tracker and M1 Finance. M1 Finance, I believe, said my dividend yield was 3.3%. Here it says it's 3.08%. So somewhere in between both of those is where I feel like my actual dividend yield is. But that's it for the Div Tracker and how much I'm making with this dividend portfolio. And that's going to be it for this week's video, friends. It's been a longer video format. My voice feels a little cracky, but for the most part, moving forward, we'll be doing these month-to-month videos, and they will be pretty long. But if you made it through the whole thing, I appreciate it. Thank you so much. And if you skip through segments, that's okay too. And that's why I have timestamps. But ultimately, I hope you guys will stick around for this journey. Stick around for the transitioning of this channel. And just know, I will be a dividend investor till the end. That will not change. And I hope one day, instead of saying $55,000, I will say, here's my $1 million dividend portfolio. And I hope of that, not just for me, but for you guys as well, as we can all join this journey. We all have our own journey. We all have to do it individually, but we could still be following each other's, follow everybody's story, because the fact is, we all have one, and it's all worthy of a documentary. And just like we made it through 7 days, we have a high chance of making it through another 7. And as always, I will see you then. And as always, take care.